Well, this is the first China Week event that we've held at Wood Mackenzie, and the motivation has been some of the fairly dramatic economic and commodity changes that we've seen in China over the last year or so. And so what we intended was to pull together that story and to bring that to key clients in key locations around the world. And so we kicked off in London, where we've met a range of clients and presented a series of briefings to try to deliver both that commodity story, but also that cross-commodity themes, which we see developing in China right now, and particularly over the next few years, given the impact on supply, demand, and price. But when we've been looking at all of the individual commodity themes, we've brought in our analysts who have that deep dive knowledge. And this week we've been talking about the macroeconomy, we've been talking about coal, power generation, natural gas and LNG, and metals. So we've been looking at the themes within that, but what we've been really interested in is pulling together some of the common cross-commodity themes that we're seeing. So in particular, overcapacity, oversupply, creeping protectionism within the Chinese economy, and what impact that is having particularly on prices and some of the very topical issues. For example, Chinese oversupply resulting in a growth in exports into the global market, and how that's pulling down price and how it's creating tensions with other governments and other producers around the world. Well, finding upside in China right now in commodities has not been easy. Clearly, there's an oversupplied market with overcapacity across most sectors, but we do see some upside. If we look in the oil sector, for example, we think that the consumer-led story in China will keep oil demand growth relatively robust, around 350,000 to 400,000 barrels a day growth in 2016, and that's driving our outlook for growth in gasoline, jet fuel, and LPG. So there's a positive story there. When we look at some of the other commodities, it's really about the opportunities for import growth. So within the coal sector, seaborne coal, particularly out of markets like Indonesia and Australia, South Africa, looks more competitive than quite a lot of Chinese domestic coal. So despite efforts to protect domestic consumers, more of that seaborne coal should find a market in China. A similar story with LNG, where LNG supply and LNG spot prices encouraging demand growth in China should create more opportunity. Even though Chinese regulated gas prices have been coming down, we still think that LNG is more competitive and should be able to find increasing demand opportunities within the Chinese market. Well, as I said, this is our first China Week, and feedback has been positive. And we've been looking in detail at a number of sectors, but of course at Wood Mackenzie we're covering more sectors than we have focused on this week. We'd love to take China Week out further, visit more key client centers, talk about oil, talk about chemicals, as well as some of those core sectors such as coal and gas and power. So as long as clients have an interest in China, we're going to continue to deepen and broaden our analysis, and we're looking forward to taking that message and delivering it in client centers around the world.